Okay, let's unpack this. We're diving deep into NVIDIA today. Um, for months, NVDA has been the stock, right? Everyone's watching.
Absolutely.
But the big question now, I think, is it still just a simple buy and hold for growth play? Or is there maybe another way to think about it now, given its size and, well, volatility?
Yeah, that's exactly the puzzle our source material gets into. We're looking at an article that doesn't just focus on NVDA stock itself.
Okay.
It directly compares it to something, well, pretty different. NVDY. That's the Yield Max NVDA Option Income ETF.
Friend, NVDY. So our mission here is to really zero in on what this source is saying. Why do they draw such a sharp line between NVDA for, growth
Mm-hmm.
and NVDY for income?
Uh-huh.
And crucially, what does that difference actually mean for you depending on what you're looking for in an investment?
Well, the source kicks things off by just acknowledging the Nvidia backdrop everyone knows. Those recent earnings.
Oh, yeah.
Huge. Revenue's up, 69% year over year, driven by that massive data center demand. And the margins are just sky high, around 71%.
Right. I mean, you look at those numbers on their own, and it just screams long-term growth buy, doesn't it?
It really does, but the source introduces some nuance here. They point out that, okay, NVDA's forward PE, it's in a range that's maybe not insane for that kind of growth, maybe 22 to 28 times earnings, something like that.
Okay.
But, and this is the key thing, this is now a $3.3 trillion company. At that kind of scale, even seemingly smaller global issues, things like changing U.S. export rules,
Yeah.
those can suddenly shave billions off potential sales. It's just a different ballgame at this size.
That makes sense. So it adds risk.
Exactly. And critically, this is where the source highlights a sort of tactical shift in their own approach, according to the article.
Oh, interesting. What'd they do?
Instead of buying more NVDA stock directly, especially at these, elevated levels,
Yeah.
they hold NVDY.
Okay, NVDY. So why? Why NVDY specifically? What's the thinking there, according to the source?
Their reasoning, as laid out in the piece, it's tactical. They basically believe that right now, the volatility in NVDA, that's actually more dependable, more tradable than trying to bet on massive further price jumps.
Huh. Trading the volatility itself.
Pretty much. And to get this, the source explains how NVDY is structured. It doesn't actually own NVIDIA shares directly. It
Yeah.
uses financial instruments, derivatives, to synthetically track the stock. Think of it like mirroring the stock's price moves without holding the actual stock certificates.
Got it. Like a proxy.
Kind of, yeah.
Okay.
But here's the strategy bit. NVDY then sells pretty aggressive monthly call options against that synthetic NVIDIA position.
Okay. Selling calls. So they're collecting premiums by selling someone else the right to buy NVDA at a certain price later on.
You got it. And the source claims this strategy basically turns NVDA's price swings, its volatility, into a, quote, cash machine.
A cash machine? Strong words. What kind of returns are they talking about?
Well, the source shares their own experience, seeing monthly payouts of over 10%.
Monthly? Wait, 10% a month?
That's what they report, yeah.
Huh.
Which, annualizes to over 120%. Now, that's obviously huge, but their point is this significant income stream.
Yeah.
It's generated directly from monetizing NVDA's volatility. They're essentially getting paid for the stock's wild up and down movements.
Okay, so let's bring this back to you, the listener. What's the catch? The source must mention a downside.
Oh, absolutely. They're very clear. With NVDY, you absolutely cap your upside potential.
Right.
If NVDA stock were to suddenly, double again tomorrow, that massive capital gain, you would not capture that pure moonshot if you held NVDY instead of NVDA directly.
Okay, that's the trade-off. Makes
Right.
sense. Limited upside for that income.
That's the core trade-off their analysis focuses on. But the source also points out where NVDY potentially wins big in a market where NVDA is kind of stuck, maybe range-bound or just trading sideways. And they note that actually a lot of 2025 so far has seen NVDA in more of that kind of environment. And that's where NVDY's income generation from selling those calls week after week, month after month, really shines according to them.
Interesting. So let's circle back to NVDA stock itself then. From their perspective, is it still a long-term buy?
In their view, yes, absolutely. But they frame it specifically for aggressive growth investors.
Aggressive growth.
Yeah. They fully acknowledge NVIDIA's AI dominance, that moat is real, it's incredibly strong, no question there. But those investors focus purely on NVDA for growth, the source argues, need to fully accept the massive volatility and geopolitical risk that just comes with the territory now. A company this big, this important, operating globally. It's just inherent.
Okay, so NVDA for growth, accept the wild ride, NVDY for income now.
That's how the source positions it. For people who prioritize cash flow today, maybe aren't just focused on potential gains years down the line,
Mhm.
the source argues NVDY makes more sense as a, well, tactical income position.
Right.
Their strategy, they state pretty clearly, isn't about chasing NVDA's price at $135 a share or wherever it is. It's about using the volatility at that price via NVDY to generate current income.
Got it. So pulling it all together, the main takeaway from this source seems to be this really clear distinction.
Exactly. They differentiate NVDA and NVDY as tools for really different jobs growth versus income.
And they really stress that you, the investor, need to, know your lane. Pick the tool that matches your actual goal.
Precisely. Know your lane.
It really highlights something important, I think. Even with a giant like Nvidia, a company everyone talks about, there isn't just one single right way to approach it financially.
Yeah.
Your own goals, are you chasing that maximum long-term growth, or do you need income right now? That really dictates the strategy you might consider, at least based on this analysis.
Which leads us to maybe a final thought for you to chew on, inspired by the source's take on NVDY.
Oh,
Think about how volatility, it's almost always framed as a negative, right? As risk,
yeah.
something to avoid or minimize.
Yeah, definitely.
But this source suggests that depending on the strategy you use, that very same volatility can actually be flipped. It can become the engine, the direct mechanism for generating potentially significant income. It's a different way to look at those price swings.